The difficulty of being an entrepreneur is if you don't evolve, you fail.
Yeah.
And you've got to recognize what's going on in your marketplace.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer. With me, excited to have Gregory Kovsky. Gregory, how are you doing today?
I am wonderful. Thank you.
Yeah, absolutely. We'll appreciate you joining us on the show. Gregory is the president and CEO of International Business Associates, IBA, the Pacific Northwest oldest and largest business brokerage firm that was established in 1975. So 30 years of experience as a mergers and acquisitions intermediary. Gregory has facilitated over 300 transactions with private companies and family businesses across lots of states. So, man, that's a lot of business, 300 transactions. So I want to dive in, see what you see as successful, and kind of get into some of the weeds here. So, Gregory, welcome to the show. Anything else you want to make sure our listeners know about you and your company?
No, it's my pleasure to be on your show today, Todd. And I would say I welcome the opportunity to share my knowledge and experience. My mother was a school teacher, and I've always believed the best decisions are made from a foundation of knowledge.
Yeah, for sure. I definitely agree with that. So with that, I want to know, because you have a lot of knowledge. You've helped over 300 businesses sell. So what lessons? Give me maybe a few lessons that you've learned about entrepreneurship, about owning a business, that you've learned through these transactions.
Sure. My pleasure. I'm an entrepreneur myself. A little history on the company might be helpful as a starting point in that I grew up in Portland, Oregon. My father was a veterinarian, and IBA sold his veterinary hospital and the associated real estate. I didn't think much of it at the time. I just didn't have to clean runs and cages for him anymore, which was a plus. Left and got a degree in investment finance and accounting from the University of Texas, pursued my first career, and came back to the Pacific Northwest in 1994 and didn't know what I wanted to do next. And my father introduced me to the founder of IBA, Bill Osofsky, and it intrigued me. And I joined the firm and emerged as one of the top salesmen with the company over the next 6 years before buying it in 2000 and becoming the second owner.
Hmm.
And when I was a broker, just working for Bill at the company, I had success selling two business models that do not exist today. And so, in response to your question, I thought I would start with you've got to know market demographics and trends, because what's successful today may not be successful tomorrow.
Yeah.
And you need to assess what that is. And so, those two industries, which we all know, at least people of my age and appropriate, the first was travel agencies. We used to have large chains of travel agencies. They used to get 10% of all airline tickets they would book.
Hmm.
So it could be very lucrative of them to have corporate customers who were flying first class or flying around the United States just handling their airfare.
Yeah.
Well, with Expedia, Travelocity, that element of the business left. There's still some travel agencies that exist, but today they mainly focus on tours and putting together complete boxes of travel opportunities where they plan your flight, your
Right.
hotel, your tours, etc. So if you didn't evolve with that industry, you're destined for failure.
Yeah.
The other industry,
Which most did.
yeah, and the other industry was ISPs, the old dial-up internet service providers, which used to be 2,500 to 10,000 party networks. And
Hmm.
today we know it's basically your phone or Comcast or
Yeah.
few options, but it was a very robust place for a while for entrepreneurship where people did quite well. And I did well as a broker because it was a classic big fish eating small fish marketplace.
Hmm. Yeah. So know your demographics, know your trends, understand what's going on in the market. Yeah, I think that's super important. Well, look at Blockbuster. I mean,
And
yeah.
and I can give you a simple example. We were talking about our kids before we came on the air today, and think just frozen dessert. And I have a 20 and a 22-year-old, and I've seen this in my life and theirs, where ice cream will rise, then it will fall, and frozen yogurt will rise,
Hmm.
and then it will decline and ice cream will come back.
Mm-hmm.
And I've watched that occur multiple times in my lifetime
Hmm.
where it's still just a frozen dessert, but for a while, with that important demographic of kids, they want Menchie's with or Yogurtland putting toppings on frozen yogurt. And
Yep.
now in the Northwest, it's a focus on unique flavored ice cream.
Hmm. Interesting. It's funny because in the Midwest we're seeing um these these yogurt labs or whatever you want to call it, where they are putting the sprinkles and the fruit and all the crazy toppings on there. Um, and I don't remember that being a thing even 10 years ago. So maybe we're just a few years behind you guys. So the next thing will be all the crazy ice cream flavors here.
Right. And if you ask your children, do they want to go to Baskin Robbins or the yogurt place with the toppings? What are they choosing today?
They're choosing the yogurt place for sure.
Yeah. And that's how trends change. And that's the difficulty of being an entrepreneur is if you don't evolve, you fail.
Yeah.
And you've got to recognize what's going on in your marketplace.
Hmm. That's yeah, very good point. It's easy to ignore and think you got to keep on doing what you're doing and just double down on it, keep on marketing, keep on pushing for it. But you make a really good point. Some of a lot of things are very trend driven, and so if you're not evolving, you're dying. That's it.
Yeah, exactly. I was driving with my son and we were looking at a former Sears location that
Hmm.
was being torn down. And we had an interesting conversation that Sears was Amazon before Amazon with their
Yeah,
catalogs.
isn't that something?
And if they had gone online with a catalog in the 1990s,
Yeah,
think where Sears would be today.
there'd still be a Sears everywhere you go. I mean, yeah, that's good. Like, what a great point. And same thing with Blockbuster. Like Blockbuster, this movie store, and they got replaced by Redbox and Netflix, and they didn't evolve with what was going on. Could you imagine those Sears if they would have said, this magazine, this book that we have, let's throw that on the internet and see what happens.
It wouldn't have been hard for them to do. It's like
Yeah.
Kodak inventing the digital camera and trying to sell us film. Their history is full of these companies that just tried to ride horses too long. And that's where I say whether it's family owned or publicly traded, if you're not keeping up with the marketplace and evolving, you're going to fail. And that's why you got to emphasize education and know your space, because it will pass you by. And as I said, it could be ice cream, it could be Sears.
Hmm.
It's anyone can get passed by if they don't respond.
Do you see any businesses right now that you feel like is they're going in a great direction, not necessarily specific businesses, but maybe niches that are like this is the trend. This is where people can make a lot. Like, what are the most exciting industries, niches that you feel are the wave of the future?
Well, I like businesses that have an online component where they can expand beyond their geography.
Hmm.
And let me give you two examples of companies we recently sold. The first one, it's kind of the FedEx, UPS play on Amazon, was a company that fulfilled subscriptions for online companies. So, for example, they had a subscription of cat toys. If you want your cat toy of the month, you would get mailed to you. Well, the company that produced the cat toys and organized it would ship pallets to this fulfillment center,
Huh.
who would take the names, box the product, and ship it out as planned. So
Hmm.
it was an interesting company because we are seeing a growth of e-commerce continuing. And it's not just the ones that sell the product, it can also be the ones who provide an ancillary service. So that's an interesting one. Another interesting one we recently sold, and this came out of COVID and they blew up, is online telehealth psychiatric care. So
Hmm.
rather than having to go see a psychologist to discuss the issues you're having, your kids maybe are not socially integrating into schools because they lost a period of time where preschool is when you start building social skills, and you want to talk about how do I get them back up to speed.
Yeah.
Well, rather than you needing to take the windshield time and drive and talk, this, just like we're doing a virtual engagement for us, you could have a half hour appointment scheduled and do it in your home with the psychiatrist.
Yep.
So those type of models where people are reaching consumers where they are. And then I'm a big fan of demographics. I study demographics quite a lot. Well, everyone knows about the baby boomer demographic,
Right.
and elder care could be a very hot space over the next 20 years, whether it's in home care or it's building care facilities that you can put mom and dad in. My mom's right now in a care facility, and it got too much for my dad to provide for all her needs. And so there's a definite need in society in that space. But the other one I'm looking at is my generation, born between 65 and 85, is fairly small, but the one behind us, 85 to 2005, is large again. And we're going to see needs for them: home improvement, buying their first houses, children, everything related to supporting children throughout their lives, from youth sports to tutoring facilities to what prom dress are you going to wear? You know,
Yep.
all those items are going to create. And there's some fascinating books on people who have rode the baby boomers successfully. When they were hippies, Levi's and blue jeans surged. And then as they moved to Dockers, Levi's declined. For a while there, they were on Harleys. Now they're not. So it's interesting to watch these demographic groups because a rising tide lifts all boats.
Yeah. Oh, it seems like one of the hotter businesses around, at least around us, people that I talk to, is service-based businesses. Yeah, are you seeing that as well? Everybody wants to buy service-based businesses.
Yes, the nice thing about service-based businesses is you can do proactive marketing and grow your business. You may need to drive a distance to serve that customer.
Yeah.
But the problem with a retail business is it's a destination business,
Mm.
and there's
They have
old
to come to you.
paradigms in real estate. Think of you go into a gas station or a movie theater. How many of the same offering do you drive by
Yeah.
to seek
Right.
something else?
Right. And you're only stopping at what's convenient too. A lot of times it's like, I'm not going to go out of my way to go to my favorite gas station. I'm going to go to the gas station. If I need gas, it's there. you know?
Exactly. I mean, I think most people probably 60-70% of the time fill up at the exact same gas station.
Mm. So, what are you seeing a high demand for buyers or a high demand from sellers? I hear a lot about the baby boomer generation wanting to sell their businesses. They're exiting. This is a great time to buy. But is there more buyers because of that than deals, or is there more deals than buyers? What are you seeing?
Great question. So I will start by saying the buyer demand is the highest I've ever seen in my 31 years of doing this currently.
Yeah.
The problem is a scarcity of businesses in the sense that our clients that we represent are executing their vision, doing what they enjoy, and making money. So, what's the urgency to sell? So, Father Time can be a big urgency. 68 becomes 72, and your spouse says, I want to be in Arizona or Florida in the winter. I don't want to be in Minnesota.
Yeah.
So, if I know in my world, happy wife, happy life. So I will probably let her drive my retirement a little bit. So that's one side of the equation.
Yeah.
The other side, I do think there's more buyers in the marketplace in two demographic groups that you may not realize. And I may touch on three. So the first one is with podcasts and influencers, there's a whole culture right now of people wanting to be founders or own their own business.
Yeah.
When I graduated from college in 89, people wanted to work for the biggest, baddest companies.
Yeah. And they want to
I have a
climb the ladder.
22-year-old who is working for Oracle right now. So he got a great job. But in the back of his mind, he wants to do his own thing.
Yeah.
And
Yeah.
it's a debate out there with that generation. So it's an interesting development because it is a cultural shift. The second group I'll touch on is, and we deal with this a fair amount in Seattle because of our tech influence of Amazon and Microsoft and companies like that. There are entrepreneurial cultures like the Indian community who have used visas to come into this nation, worked for Microsoft, have contributed to the company, got their green card, transitioned to being citizens, have their family here, but they don't want to work for the main. They want to be creators and builders. And there's a real push in society now to buy then build.
Yeah.
The 3PL company I mentioned that does the subscription service is the buyer of that company was a Nike exec
Oh, wow.
who left Nike and said, I'm ready in this chapter of my life to do my own thing. I want the helm of the ship. I've had great experience and knowledge, but I have ideas that rather than having to go through my hierarchy of executives to get approved, I want to be able to change direction and navigate. And then the last thing is there's about $1 trillion on the sideline. So there is a lot of family offices and private equity firms that want to deploy capital because buying a business, you can get over a 20% return on your investment,
Yep.
which you can't do in a lot of venues. There's risk, but if you can manage it well, your returns are quite good. I mean, it's essentially what Warren Buffett did on a large scale.
Yeah. 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 You're seeing that a lot more right now, whether it's private equity or um, just smaller. I mean, technically it'd still be private equity, but smaller groups that are trying to get into buying businesses. Alex Ramosi, I don't know if you follow him. There's many of people out there. I think, so what I'm seeing a lot is, I mean, I'm in the commercial real estate realm. We own a lot of multifamily buildings. We own some assisted living, so that's a business. But um, what I see a lot is a lot of real estate investors are going, well, my returns are just low. Like we're not finding deals. My returns are much lower, and it's really hard for me to get these real estate deals done. So where else am I going? And so a lot of people are talking about buying or building their own business. And so we're seeing a lot where people are transitioning from real estate to business ownership. And I think one of the biggest risks that I see is a lot of real estate people, the real estate's more passive. What, what do you say to somebody wanting to buy a business, or multiple businesses? Maybe they want to buy 5, 6 businesses. Can you do that in a passive capacity like you can with real estate?
Passive ownership generally doesn't work.
Yeah.
You get it dialed in, and I've seen people get it dialed in, and then your general manager wins Powerball, or their spouse gets sick, or something happens that they need to leave, and then who's going to fill that void?
Right.
So it's difficult. But what you're talking about, real estate, I think is an interesting topic in that there is a real estate play in buying owner occupied real estate along with a business.
Mm-hmm.
And the advantage of doing that, beyond getting rental income generally with a separate LLC, is you can control your occupancy cost, and it can be a competitive position. Right near our office is a legendary tavern lunch spot called the Pump House. And it's been around, I believe, since the 1950s.
Oh,
Make a
well.
great burger. It's kind of where the Old Boy Network did lunch for many years in
Hmm.
Bellevue. Well, they own their real estate, and now they have a light rail depot right next to them.
Hmm.
So where this real estate is blown up in value, it may not be the highest and best use of the real estate anymore. I'm sure they could sell that, but from a business operating standpoint, they're on the 50-yard line, and their building's been paid off for years.
Hmm.
So it makes it much more profitable because
Yeah.
generally your occupancy cost should be 6 to 10% of the revenue of a company.
6 to 10% of the revenue. Okay. Got it. And so are you seeing a lot of these business owners that they're selling both the business and the real estate as one, or are they selling those as two separate transactions with two
Well,
different
we
buyers?
frequently sell them as a package. For example, we just sold a auto service center that had a tire shop, a quick tune and lube, a car wash, and a gas station all on the property, and it sold as a whole package.
Hmm.
There are other situations, and staying in the auto space, there was an auto repair business located by the University of Washington that had been there forever. It was probably worth $700,000
Hmm.
as far as value, but the real estate was worth several million to a developer. And we actually referred it to another commercial real estate firm, and they sold the real estate for the highest and best use
And so did they sell the
because
business too, or would
no,
they,
the business closed in that
the
case
business closed in that
because
case?
if you got an SBA loan and financed it, it's a 10-year term loan that needs to match the term of the lease.
Yeah.
And if you right size to the lease, the business
Yeah.
dies.
So it just
So
made
it's
way more sense to sell that piece of real estate and the business can just shut down
yeah,
in
and
this
it was
case.
a retirement
Yeah.
situation. And
Yeah.
so
Hmm.
we just told them we could sell the business, but this is not in your
Yeah.
best
That's not in your
interest.
best interest.
You have more than enough money to retire. This
Yeah.
other sale will likely go to your descendants or favorite charity. So just do this and don't make your kids have to deal with this tenant who we all know maybe they're not successful and they're behind on rent or whatever
Hmm.
occurs.
Hmm.
And now you're can't sell that asset.
Hmm. Um, what about business valuation? How do you come at it as I know you're as a business broker, you're representing the sellers, correct?
Correct.
Yeah. So, but as a buyer, I'm coming to you and I go, hey, I want to buy a business. How do you look at a business valuation and determine what makes sense for you as a potential buyer? What makes sense to get into a deal?
Excellent question. So, business valuation is a subjective science.
Yeah.
10 educated people can all value the same business and come up with 10 different values.
Hmm.
On one side, it's an investment decision.
Yeah.
On the other side, it's selling art because frequently these businesses are one of a kind in a geographic area.
Hmm.
So what you need to look at is look at it like an investment. And we all know on the investment scale, you start with CDs and bonds, you move to real estate, you move to mutual funds, you move to big cap stocks, small cap stocks, and then you get where I live, which is privately held companies, family owned businesses, generally 15 to 50% return on investment, depending on the industry and risk. So you first assess that given historical financial data. And then the next thing you need to look at, just like a company going IPO, is what is the appreciation potential of this investment? And those items are put into your stew, and you come up with the classic definition of what is something worth, what a willing buyer and seller agree.
Yeah.
And I can tell you, I just put into escrow a company that manufactures um, surface materials, granite, quartz,
Sure.
marble for construction. we had 6 offers, and they came in at a spectrum of values. And actually, my client did not pick the highest offer. They picked one that was slightly below the highest offer because they thought the buyer was better for their customers, employees, and vendors, and they don't want to impact the lives of the employees
Yeah.
or their customers. I
Yeah.
mean, to them, it would be horrible to run into one of their former employees at a restaurant and say, I got laid off a month after you sold the company. You must be doing well out on your boat, but I'm struggling to pay my bills. So
Yep. Yep.
I was blessed to have a client that had some heart.
That's an interesting aspect of selling a business and buying a business, is that it's not like where real estate is very transactional, not emotional at all. I mean, well, I shouldn't say at all, but like compared to that, you would never think about, well, I'm gonna go with the best buyer because I think they'll take care of the staff and the residents, right? Unless you think they're a scumbag, you're selling it. Where in this case, it's a lot more feelings involved. You want the right person to take over the company. It's your baby. You've been growing this baby for who knows how long. I mean, it has been in the family. It might have been passed down from your parents, even. It's like this is a real deal, and we want to make sure it gets into the right hands. And so, as a buyer, being aware of that, I think, would be probably extremely important. Being aware of what you're actually buying. You're buying more than just a business. You're buying somebody's history and basically their family from them.
Yeah, I mean, you get owners who've owned a business 25 years or longer.
Yeah.
You've watched your employees sometimes build families,
Yeah.
send kids to college, whatever it is.
Well, and the kids come
They're,
and work for you now.
yeah, I have seen that where multiple generations work for the same
Yeah.
roofing or HVAC company because it's been good, dependable income.
Yeah.
And a staff like that has value to a buyer.
It's a
It's
ton
one
of
of the
value.
things you're buying,
Yeah.
but you've got to embrace the corporate culture. And unfortunately, I have seen Harvard MBAs back office manage a business to death. And it's really sad in that they are looking at it just from a income standpoint, not realizing that the turkey everyone got at Thanksgiving was important to the staff.
Hmm. How as a buyer can you ensure that you're taking over the right business? I mean, like in doing the right things. Is there how do you even know that going into it?
Well, we employ a process where we walk down the path. So I would recommend multiple meetings with the seller, drilling into what they do and what the company does. Everyone can fall in love with a P&L. At the end of the day, can you ride this bucking bronco? And that's a really important thing. And then
Yeah.
your relevant experience is very important as well. What are you adding to the company? I live in Redmond, not far from Microsoft. Microsoft was static under Steve Ballmer for many years. Satya took the helm of the company and took it to a much better place. Leadership matters,
Yeah.
and it matters at all levels. That's why I gave the Microsoft example. Microsoft has more money than God, but yet their stock was going nowhere.
Yeah.
It wasn't a place people wanted to work anymore. I had friends who migrated to startups because it wasn't a fun place. And Satya has done a good job at re-energizing that and the value of the stock publicly has been reflective of that.
It's a good point. Um, Shifting gears just a little bit on that down payment, or like, what somebody looking to buy, and maybe on the sellers, what do you kind of expect there? Is there a lot of seller financing happening? Is there I know SBA is a pretty big thing. Is that pretty typical for financing? And I guess there's seller financing pretty common.
Yes. So up to about 7 million in transaction size. You can generally get it done using an SBA product, which is a great product. There are some banks that will supplement with their own loans above the 5 million cap, and that's why I mentioned 7 million as a possibility. It's common for a buyer to put in 10-15% of the purchase price. They should have some skin in the game.
Yeah.
And then often a seller will finance about 10%. And as a buyer, you want the seller to finance a portion because A, it gives you leverage to address trailing liabilities. If, let's say, you were doing plumbing work and the week before the sale, you made some error and there was a leak that damaged the house, you need the seller to take ownership of that error because they got paid for it.
Yeah.
And if they don't step up, a right to offset in a promissory note can make you whole. And then other issues that can be addressed are non-competition agreements, making sure they honor that, and then also transition training or consulting. If they say they're going to be there for 3 months and smoothly hand it off, and the first week after they say, I'm going deer hunting, that's not providing you the support. And so there should be a leverage point to make them do what they agreed to in the legal documents.
Yeah. Good points. I mean, it's probably pretty easy to try to set some of that stuff up, but actually making sure that there's some checks and balances with that, super important. So, Gregory, what's a mistake that you've seen? Maybe something that you've made, a mistake that you've made, or some mistake that you've seen made consistently, and how can our listeners learn from it?
I would say a mistake I have made in the past and I've seen people make in the past is hiring the wrong people. Integrity is a very important component to me.
Yeah.
I had a top producing broker who was crossing the line to get deals done in what I thought was best practices and integrity. And I had to make the hard decision that my brand couldn't have him as part of it moving forward. And this was over a decade ago, but sometimes you are penny foolish in that you don't hire the person you need for the job based on knowledge and experience.
Yep.
Or someone is a wolf in sheep's clothing and not right for your corporate culture. And it's hard to let someone go, but many athletic teams have decided this person's not good for the clubhouse. I need to move them on because they're not buying into what we're trying to do.
Yeah. Yeah. And you gotta let them go quickly. And that's hard, especially, look, there's people that are really good at what they do, but if they're just a cancer to the organization, that's the hard, those are the really hard ones to get rid of, right? Because they're really good, they're efficient, they're performing well, except they disrupt the whole culture of the company. So,
Yeah, and admitting you're wrong is hard,
yeah,
and we all have egos.
yeah,
But if you can be humble and realize none of us is perfect, I mean, I've done marketing programs that threw money at that didn't pay the dividends. And rather than just feeding the fire and say, this has to be right, saying, maybe it wasn't the right venue, let's step back and maybe redeploy in a different direction.
yeah, yeah. Um, well, good stuff. So, I have one more question that just came to mind. What's the reason why a business deal is going to fall through, going to not transact? If I got something under contract or somebody puts my, business under contract, why would it fail to sell?
Deep question, but I'll try to answer
But
it
just
somewhat
maybe a couple of the most
succinctly.
common things. Yeah.
But so I believe a successful deal starts with a comprehensive letter of intent where all the business terms are clearly laid out,
Hmm.
from the price to the non-competition agreement, what's the area and the time frame, how long is the seller going to stay on for transition training. All of
Hmm.
those things are elements that buyer and seller agree on before you get further down the line. The next tier is having reasonable expectations, for example, on legal documents. Attorneys sell fear and can create confrontation. And a broker who has been in this pond an extended period should know where the middle of the fairway is and advise both parties that you're probably not getting it done at this position. In
Yeah.
a perfect world, it may sound great, but it's not the real world.
Yeah.
We all can say to our kids, bedtime is 9 o'clock. How often does 9 o'clock get achieved? And so that element, and then making sure the buyer has the financial strength to complete the deal, both in terms of a capital injection to do the deal, working capital post sale to run the company, because inevitably you buy a company, we're talking service companies, and an engine blows up.
Yeah.
And now
Right.
you need to replace a vehicle. Do you have the ability to do that, or have you spent your last dime? And then finally, and you're a landlord, will the buyer get past the landlord because the seller doesn't want to personally guarantee that lease moving forward? They're
Hmm.
retiring,
Good point.
and the landlord doesn't really care whether the deal happens or not.
Yeah.
They've got a good tenant right now who's been paying rent on time.
Yep.
So does the buyer have the signature power and experience to sell themselves to the landlord so they can, again, with an
Hmm.
SBA loan, get a 5-year lease with a 5-year option? Because if they can't do that, the deal fails at the 11th hour.
Yeah. I never thought about that. That's a really good point. There's a lot to think about through that. So your job to me is less of a salesperson. It's more of a communicator and somebody who's got a navigator, right? You're communicating with both parties, getting them both to go, okay, I can see that point. Oh yeah, I see that. I understand that. And then just getting everything organized so well to where we know what we're doing. We know what we're getting into. Am I accurate there? You're not a salesperson. You're a communicator or organizer. That's your job.
Well, we're a salesperson in the sense we got to
Yeah.
get people to yes,
Yeah.
but we
Right.
are a facilitation role to a large
Facilitator.
extent.
Yeah.
And one of the overarching concepts of my firm is the golden rule, which do unto others as you want them to do unto you. And I'm frequently saying, can you walk to the other side of the table and just look at this from their
Right.
perspective? Is it reasonable? If you were
Would
buying the
you do that?
business, would you do that? If you
Yeah.
say, I would do that, well, now we probably are in the sweet spot. If you would say, I would never do that in a million years, but let's get them to do that, you're asking me to do a heavily lift as a
Yeah.
salesperson.
Yeah. Yeah. That's a totally different deal. Good stuff. So Gregory, I got a couple last questions before we wrap. What's a favorite book that you can recommend to our listeners?
For entrepreneurs, one of my favorite books is Shoe Dog,
Oh yeah.
which is the story of Phil Knight's birth of Nike. And one of the most fascinating pieces in that book to me was how many times Nike was on the razor's edge because he didn't have the money to buy the shoes coming into the country,
Yeah.
even though he had them already sold.
Yeah. Yeah. That was a fascinating book. Actually, both my kids listened to it as well. And so they loved it. What are your three pillars of wealth creation?
I believe the three pillars of wealth creation are knowledge, experience, and skill. If you have those three things, you'll be successful. My mother growing up said to me, if you're good at what you do, money will follow. Focus on being good. Don't focus on the money.
Yeah.
You could be the best chef in the world. People will
Hmm.
line up. You could be the best baseball player. You'll get paid well. You could
Yep.
be real estate broker or whatever you choose.
Yep. Yep. I agree. Yeah. Don't focus on the money. Focus on the knowledge, experience, and skill, and the money will come.
Exactly.
So, and quite frankly, satisfaction too. Right. We all want to be happy and satisfied with what we're doing. So, if you're
Well,
just
what is
focused on the money, you're probably not too happy.
what is the famous saying? If you do what you enjoy, you won't work a day in your life.
Yeah. Absolutely. Well, Gregory, man, look, I really appreciate you. Appreciate your time. How can our listeners get in touch with you?
The first place I'd send you is to our website, which is ibainc.com. So ice cream boy, Apple, ice cream Nancy, Charlie.com. And I would recommend we have a very robust blog that has had close to 200 authors with
Hmm.
everything about buying and selling a business and entrepreneurship. If you're reading inclined, great information there. You can reach me at our corporate headquarters in Bellevue, Washington at 425 454 3052.
Awesome. Gregory, again, really appreciate you. Appreciate the time on the show. And you have a fantastic rest of the day.
Thank you, Todd.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.